All right. Hey, everyone. Mark here. Sorry I'm running a little bit behind today. Usually I get this started a little earlier. But anyway, thank you for joining me. Welcome to another Greenbridge Investing Market Analysis. So today we're going to take a look at the stock market because obviously there was some action. And we're going to talk about what this means because I still think even with what we saw today, the market is still somewhat reluctant, and that's really like the point of the video. So we're going to look at the S&P, the NASDAQ, and Bitcoin, and we're going to look at levels that we should anticipate. Plus, we're going to cover some of the stocks. I know we had some questions in the chat room about some stocks, so we'll take a look at those as well. All right, so let's get this started. Again, thank you for joining me. So, oh, by the way, if you have any symbols that you would like to see or any markets, please share them in the channel now so that I can, once I complete my analysis, I can start going through your tickers. Hey, DJ. So I'm going to try to get through mine very quickly so I can get into yours. So here we go. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, now, so today's Friday. Hey, Joe, thanks for joining me. So let's start with, before we get into Bitcoin, all right, let's start with the S&P. So I'm going to take a look at the SPX USD. Now, so we've been talking about, and I had some questions in the chat room earlier from Michael about, his question was, are we still looking for a bearish momentum? You know, since the market looked, when it started out earlier today, it looked like it was trying to maybe not be so bearish, right? Very early on. But the thing is, we do have this lower high in place, okay? Ever since the FOMC meeting. Here, I'm going to make this bigger so you can really see it, okay? So that lower high, right, that's the S&P, and the NASDAQ looks pretty much the same way. This was put in, established on FOMC on Wednesday, and since then, we've been taking out the lows, right? Okay, that's fine. So we have a lower high in place. In theory, we should make a lower low. Now today, the market tried to make a lower low. And as you can see, it failed so far, okay? Now, it's still closing week, obviously. We're going to close in 30 minutes. Most likely, it's going to close red. But the thing is, we didn't make a decisive lower low. And this is what I mean by reluctant. We should have started pushing here, which probably would have been very dramatic, you know, today for a lot of people. But that's really, now it's possible that we see this next week if we get, you know, whatever, some news, some catalyst to push this thing into this area. But in theory, that's where it should go. And you're looking at what? 3290s, what's the high there? 3279, 3280, something like that. Maybe in this area here, 3250s. That's in theory where it should go, which means not good for stocks, okay? This is why we've been always so cautious about getting long too many stocks, or always warning about getting too big and all that kind of stuff, or overexposed, because if this thing breaks, it's not going to be pleasant. Now the thing is, it may not break, okay? Just because we have a lower high doesn't guarantee we will break. And if we do break, again, if we may get a failed low, and that failed low can take place somewhere in here. So what that will do is it will lure in a lot of people, right? Well, see, that's the thing, DJ. It'll lure in, if we get the failed low, you're going to have lots of people buying puts, lots of people getting short, this and that, whatever. And if it fakes out, then everyone's going to be caught and you're going to see the bounce. This is why I don't get overly bearish when I see something like this, because the tendency, human nature, a tendency is to basically focus on that. Okay, that's, oh, okay, it's bearish. Okay, yeah, it's true, that is bearish. But that is small magnitude relative to all of this, right? So we can't forget about the broad bullish trend, which is still nicely intact. Okay, just because we have a lower high doesn't mean the trend has changed. It just means that we're in a consolidation of some sort of bearish structure, corrective structure, and you know, we can get like a triangle that goes slightly lower. I'd be really paying attention to the lows and the price action at the lows, because I'm looking for a range over the next month or two going into the election. That's what I'm looking for. keep in mind that the administration is going to do everything they can to prevent this thing from going lower. So it might go slightly lower, but just remember, you're fighting a lot of you're fighting a lot of effort to have this thing not go lower, okay? From people that have the power to move markets just by talking. So just something to keep in mind there. Don't lose sight of this. This could be a buying opportunity for stocks, at least for swing trades. I mean, not after today's candle, but that's what I will be looking for early next week if we find stability here. Right now, I can argue that this is a double bottom, okay? Especially if we take out today's high next week. We can argue that that's a double bottom, and which would cancel out the lower high if that sticks. So we have to see, right? We can't make judgments now. All we can do is look at the clues, look at the levels, and then see how the market plays out. The market needs to provide the answers, not us. So now that's the S&P, right? So again, I'm bringing this up because this is what I mean by reluctant. It should have kept pushing. It should be closing on its low, not sitting there with a pin bar like that. Let's take a look at the NASDAQ. Okay. Now intraday, of course, they looked horrible. Intraday. But what really matters is the bigger picture. So the NASDAQ, again, tried to make that lower low. Look at this. Just take a close look at this. Look at that, right? And it's giving us now a pin bar, which means got a lot of people caught on the wrong side. They're short and they're getting squeezed, right? That's usually what a pin bar is all about. And we can argue that this is a failed low right now. Of course, it needs to take out the high, which is what, 176? It would have to do that next week to really make that active. But the thing is, something that's really weak should be pushing lows right now. Okay, we have 30 minutes left. This thing should be selling off into the close right now. It's not doing it. So that's a sign of a fake out. Okay, I don't care about the lower high. I mean, I do, but the point is, don't be fooled by all this smaller magnitude price action when the bigger picture is still intact. Okay, just like the S&P, look, there's an inflection point right there, and that's where the buyers are stepping in. So there will be some stocks possibly next week for swing trades with conservative targets to just try to take advantage of any fake out type of bounce, right? That maybe will establish the next high in the range or consolidation. Remember, consolidations could be expanding. They're not always contracting. All right, so just something to keep in mind. Don't lose sight of that. All right, so those are those two things I wanted to talk about, and what I mean about the reluctant nature and how not to get over opinionated, because that's what gets you into trouble, right? Okay, everyone, oh, I want to buy puts, I want to get short. Okay, but you can't be overly opinionated. You have to watch out for what can go wrong with that position. So here's Bitcoin. Now, Bitcoin, again, and I've been warning about this level. I don't like this level. Andrew was talking about a possible buy signal earlier. I would not touch this thing. Okay, aggressive or not aggressive, I don't like it. Now, yeah, it can pop up a little further, but unless you're day trading this thing, or unless you're looking for a couple of 100 points of profit, it's not worth the risk you have to take, because this is where your profit zone would be somewhere in here, okay, for that type of magnitude of trade. Otherwise, you're running the risk of getting long, watching it fool around a bit higher, lure some more longs in, and fail up at this resistance. And then, you watch it pull back 1,000 points, and you're like, oh, that sucks, right? So just avoid the whole thing. So this, again, you could get a consolidation here. It may try to break out higher, but not worth the risk, in my opinion. This is not a high probability location, okay? It's not the most attractive location. You're right in the middle of the range. So again, this game is about probabilities, and a lot of times the stock that you're looking at or the market that you're looking at may not be at a high probability level. So a lot of times, even if it goes the way you thought, it's better off to leave it alone, because what you don't realize is all the times that you take those trades and they don't work out, you lose more usually than what you make, by being right. It's very random and just not worth all the trouble you have to go through. So this is why it's better off to wait. And like I said in the little write-up that I wrote for this video here, levels, right? Got to wait for the levels. That's where the good trades are. Trades that have a tendency to work, that are more likely to go in your favor sooner and at least reach the first target, right? So we have this level here, which is what the 10.5 area, which we've talked about that for a while. It tested it, went below it, broke back above, and I think that could be our next inflection point. That would be a nice higher low location. I would love to see that for a new swing trade long. Remember, Bitcoin seems to be sensitive to the stock market, right? We have a weak stock market day. I mean, Bitcoin's not selling off dramatically, but I don't see it going long either here, right? I don't see a green candle. So I would rather wait for a better level than try to force something around here. Again, as a swing trader, I'm not day trading this. As a day trader, sure, you take the breakout and you try to grab a couple of 100 points relative to the risk that you take, all right? Something like that. So that's Bitcoin. Now, I bring up Bitcoin because remember, it's the leader in the space. So let's take a look at some of these other ones real quick. Litecoin, right? Litecoin looks like complete garbage. Look at this. It hasn't even tried. Look at this lower high over here. Okay, this is not a good sign. It's relatively weak. Now, of course, some news can come out of nowhere and change things, but right at this point, based on this chart, that's not a long. Okay, not looking strong at all there. Let's take a look at LINK USD. Again, I like to just look at some random altcoins just to give you a sense of, Bitcoin's the leader, and if that thing is not performing, these things are most likely not performing either. Look at this, lower high and lower high. So yeah, we can still argue that the broader structure is bullish. That's true. This hasn't changed yet, but this momentum here is just not favorable. So you're at a good level over here, not bad, nice level, but no candle. There's no setup. So you're better off in this case, like if you're interested in something like Chainlink, waiting for an inside bar, waiting for something that says other buyers are stepping in and you're not the only one. That's one way to do it. A more conservative way, but much worse price, is you wait for this breakout. Okay, once that breaks out, which is, what is that? Basically 1310 area. Once it breaks out, it's basically telling us that this bearish structure is pretty much no longer in control. And that's more likely where you're going to see a bullish structure follow. Breaks out, and then look for the higher low. Okay? Which, again, this type of price action takes days to unfold. It doesn't take minutes. So I just wanted to point that out. Okay, cool. So those are the main ones I wanted to go over. Let me just pull up one more real quick, and that is the dollar franc, and then I'm going to get into your stuff. So the dollar franc, it's slow, right? We've been talking about this as a long. This thing's trying to find support over here in this area. Hasn't been performing, okay? This is a tough spot. So what do you do? What do you do if you're long? And that's just like an educational thing I wanted to, share here. Something like this, the overall trend or the most recent momentum is definitely not bullish, right? We got lower highs all over the place. And we have this lower high that's still intact. All right, the thing is, it's not making lower lows. Okay, so that's where you can give it a try, but if it starts taking out these supports, start taking out these lows at like 90, 80 or 90, 50 or even 90 cents, this thing is most likely going to make a lower low. So just be careful of that. Like I said, we've been looking for dollar bullish. We've been looking for that for a while. It's not developing. So when the price action tells you something and it's not developing, you can't get stuck with an opinion. It's like, okay, you know what? The broader trend wants to be in control. If it takes out the support, short. Okay, just something to keep in mind with that. Same with the dollar Canadian is probably going to be in a similar situation. Let me just pull that one up real quick. Well, actually it's a little healthier looking than the dollar franc. You got a little higher low trying to develop in there. Okay, you have this little situation right there. Okay, not bad. And the overall structure has tried to be bullish. We tried going long this one a few times. Didn't work very well. But again, if the dollar stays weak and this thing starts taking out supports, I would look for a lower low. Okay, that's what that because it's not doing anything to prove that the broader momentum, this momentum is no longer in control. It's really not doing that. It needs to take out a resistance. Okay, so you have a resistance there, and then you have like one over here somewhere. Okay, needs to take out resistance to say, okay, that broader momentum is no longer in control, most likely. Now you can look to buy supports. Okay, anyway, so I want to put a couple of those in there. So let's get into what you guys want to talk about. By the way, if you're new to Greenbridge Investing, it's always nice to see some new names. Please make sure you check out our website at greenbridgeinvesting.com. Subscribe to the channel here, and you'll get an email notification every time I stream one of these. And you'll get the podcast too, right? When we stream the podcast, you'll see that. Plus, send me a like. Give me a like. Let me know if you like the video. And that's always encouraging. It's nice to see. Okay, it helps to motivate me. All right, so just wanted to put that in there. By the way, Greenbridge Investing, we do swing trade signals by text and by email. We also have Trade of the Week, which we give to our free members as well. So it's worth signing up just for that. Okay, they don't all work out, but they've been pretty decent for the most part. All right, so let's take a look at what you guys want to see here. All right, so hey DJ, hey Joe, Hamid, can you please look at GFF? Good place to add to my position. Okay, let's see, GFF. Is GFF a stock? I'm guessing it's a stock. Well, nice structure right off the bat. Right, so the first thing I want to do is look at inflection points. Right, so I got one here. I have one here. Right, these are historical levels. These are areas where price reacted for whatever reason. And pretty much that's what our inflection points look like right now. Now that has nothing to do with trend. It just has to do with support and resistance points that we can consider for certain reasons. Now, your general structure here is bullish. Okay, that's good to see. Tried to find support here, giving you a higher low. Okay, this isn't bad what it's doing right now. You have it's trying to take out this little mini lower high. I see that level right there is a problem, which is the 20 and a quarter area. All right, so your question is it a good place to add to your position? Well, it's not the best place, okay? And one way you can compensate for this is you can just maybe add with a smaller position. Maybe like if you normally do 100 shares at a time, maybe you put on 20 shares on this attempted breakout here. Now, what's going good for this is the stock market was very weak today, and this thing is strong. Okay, that's good. So that's you have that going for you. But as far as better probability goes, because I don't know what's driving this thing. All right. You are going right into this resistance here at that 20 and a quarter. So that's one little problem. The ideal prices would be somewhere around here, which is that inflection point, which is what? That is the $18 area. So somewhere around there would be better. So one thing you could do is you can split your order. Maybe you buy 20 shares now, and then you buy another 30 shares or something if it pulls back. Okay, if it doesn't pull back, well, at some point it's going to retrace. So maybe it touches the resistance, and then maybe you get a higher low, and then that would be a more ideal place to put on another part of the position. I think it's better off to do it incrementally like that than saying, okay, I'm just going to add another couple of hundred shares here and hope for the best. It's just not worth taking all that risk. But again, you do have some nice things going for you here. I just when I see this kind of price action and I don't see a nice clean double bottom or a nice clean cut higher low, I just hesitate, because this momentum from this could still be in play. All right, but if this thing fails to make a lower low, then you should be good. All right, so ideal would be double bottom. Less than ideal would be a higher low, and 50-50 would be the breakout now. All right, and watching this thing break out. All right, so I hope that helps. Let's see who else we got here. Okay, so thanks, Hamid. Savi, can you take a look at Ethereum? Sure. All right, so let's pull up Ethereum. And let me see here. Ethereum. All right, is this the right chart? Okay, now I have a chart with certain levels on it. Yeah, there it is. Okay, so here's Ethereum. Now again, this is going to follow Bitcoin, so you can always use Bitcoin as your guide, just like the S&P serves as a guide for stocks. So in this situation here, obviously this structure is still in play, so that's good, right? Generally bullish, right? Like Bitcoin, okay, no problem. But more recently, we've been looking at this type of hesitant price action. I mean, look, this yesterday's candle, nice, off of that higher low, nice, off of this inflection point, nice. That's a proportional level. But now it may be a failed high over here. So this price action is really nothing more than noise because it's still inside of a range. This thing really hasn't gotten out of this range, okay? So it's possible. On top of that, you're looking at like the middle of this entire move. You're looking at like, this is sort of see this, you can look at that as the high and low of the overall range. You can look at it that way. And you're fooling around right now in the middle of it. Not a good place to be putting on positions. So what I'd wait for longs, because we don't short this thing, I wouldn't short it, that's just me. But as far as longs go, I would wait either for another test of this low over here, which is that 360 level. If it's taken out, I would look for a failed low, because remember, this market is not exactly weak. It's just consolidating. So I'd look for a failed low somewhere in here, which is like in the 340 area. And the ideal, most attractive would be here somewhere, if you can get that. Now, the market may not deliver that. That's the 310, or you can round that to 300, around there. That would be ideal to get a double bottom. Nice reward risk, probably nice high probability too, if it can produce something like that. But again, you can't count on market revisiting there. It might not. So you have to look at, so we have a couple of inflection points to consider if this thing can pull back. But I can tell you that right now, the current price, this current area, is just it's a random area and not a good place to be putting on any positions. Okay, long or short, because this thing may continue higher. This thing may try to produce a head and shoulders from this resistance up in here. That kind of thing. So I would just wait for one of these support levels. Okay, so that's Ethereum. And again, you can use Bitcoin as your guide. All right, let's see what else we got. So DJ, SPY puts, right. So I addressed that. You got to be careful. Now, SPY puts and Qs and IWM, let's pull up the IWM real quick. This thing hasn't been, with the stock market as weak as it is, this thing should be selling off. It's not. That's not a good thing if you're short. How about the German DAX? What's that ticker again? It's DE30 EUR. 30 EUR, right? This is not the right trade information. This is old. I have to update that. We sent out a swing trade idea the other day. Andrew sent it out. And someone, in fact, asked about, I'm bringing this up because, DJ, you mentioned the SPY and the Qs buying puts. We have a short position in this thing, and someone said, hey, there's this pin bar. Should we be concerned? And my answer was, well, no, because of the position of the S&P and NASDAQ, they're with the lower high, I would at least look for an effort to go lower. It tried today, not a very good job. And so this thing, if I was, being short this thing, I would still hold on, all right, until this thing really starts pushing levels. But that's why we have a stop in place and just rely on the stop, because trying to second guess this is very difficult, usually not worthwhile. Now, the DAX, the reason why we were looking for short to begin with was because of the relative weakness compared to the March peak, right? The S&P and NASDAQ are much higher, while this thing has not pushed that high. So if we get a lower high here, this thing is a good candidate for a short, but we need to start taking out these supports. And it hasn't done that yet. This could be the beginning, but until it starts taking out these supports, this thing is going to require patience to hold on to. Okay, anyway, so I just wanted to throw that in there. Now let me see what else I have. Okay, ATEN. Sure, Haman, let's take a look. ATEN. All right, let's see what the story is here. I think you've brought this one up before. That sounds familiar. So right away, I see this old resistance, new support area. And it's trying, look, you get this little double bottom situation. So it's trying there to hold. Okay. Let me see. It's not a bad candidate for a swing trade long. I mean, you're facing that resistance right there, right? That's one point. You're facing this one as well. So at least, you're buying off of a support area if you buy this, and your risk is defined by this low, 686. So you figure 650. Not bad. And what kind of potential you're looking at here? Let's see. So if you're buying it around $7, what's today's high? 735. Okay, so if you're buying this thing around 750, let's say, you're looking at, what is this? 770. That's not a good target. It's not, the reward risk wouldn't be worthwhile there. 803. Still, so the question really here is the reward risk. All right. If you buy this thing at 750 and you put a stop at 650, you're risking $1 basically. You need to be making at least $1. So where would that be? If you're buying it at 750, that means you need to be selling around 850, which is up here. Okay, this is that 850 area. So it's kind of, can it do it? I mean, I guess. Let me see. Let's just look at the bigger picture here. Let's zoom out further. I mean, it can. The thing is, you're trying to squeeze $1 out of this thing. Trying to squeeze $1. You're fooling around at a pretty significant resistance area. Okay. So it could be worth the try if you're into that, but I'm not a big fan of it because there's many stocks that offer probably greater potential. But to answer your question, I mean, I definitely see the long, and I see at least 1-to-1 reward risk. Okay, a position. If you're taking a position, you should at least have 1-to-1 reward risk at minimum. Okay, if you're risking $1 and you're trying to make 50 cents, you're not going to make money in the long run. Okay, so thank you for bringing that one up. I hope that helps. Joe has a question here. Could you have a look at Apple? Sure. So AAPL. Been buying puts on this. Closed it today. Looking for a bounce early next week. Oh, nice. So I hope you made some money on that. So this is basically buying Apple or selling Apple is no different than the Qs, really, right? Because it's like a heavyweight on the NASDAQ, so it's pretty much the same deal, right? Now this thing closed. This is what the S&P and NASDAQ should have done. If they were going to be weak, this is what they should have done. Closed like that. Okay, this market has a few minutes before it closes. This is how Apple's going to close. So, but that's not as significant. See, with the S&P, if the S&P and NASDAQ are holding up, then this thing will just likely bounce, right? You'll probably get a failed low. So we can't make a big deal of the fact that it's closing weak like that. But as far as putting on a new bearish position, Joe, I would be waiting for the retrace back up into this area here. Okay, something like that would be a good start. This thing may not make it that far, but you're looking at, what is that? Let me see. The 120? Yeah, like the 120 area. Okay, something like that. If this thing can bounce there and you can get a bearish candle and you take out the low of that candle, it's worth a try. Okay, it's worth buying the puts and all that stuff because again, at that point, this thing will probably be establishing the boundaries of its range. So that's what we want to see the bounce and we want to see how far it goes. The mistake you want to avoid is it tries to bounce, gives you like a green candle, and it gives you a red candle right away. And then you think, oh, okay, it's a short again. Meanwhile, you're shorting it or buying puts right into the low. You don't want to do that. This thing needs to go to some sort of resistance area, and those are going to be much higher prices. Okay, so definitely some potential there. Just keep in mind, though, there are going to be a lot of people looking for a buying opportunity in this. I mean, look at this. That is still in play, and we can't argue with that. That's bullish. So people are going to be looking for a buying opportunity. In fact, it may even be worth buying calls just to see how far that thing goes. if you get the buy signal. There's no buy signal there, but there are going to be many people looking to buy Apple. All right, just something to keep in mind, especially since, you know, it's so high profile. They're going to be talking about it all over the news and all this other kind of nonsense. So just something to keep in mind. All right, but nice trade. If you made some money on the short side there, very nice. Not easy to do. Okay, so that's what I'd wait for. I'd wait for that 120 area at least. So Jay Watt, Friday's IPO day. Yeah, what IPOs came out? I didn't even see them today. Usually they're not good to get involved. I know there was one recently called Snow. Look at this mess. You know, they're usually not a good idea unless you're day trading. Someone brought up in the chat room earlier today. I want to talk about this one real quick. Uni. Let me try USDT. USDT. Okay, I guess, yeah, it's going to be similar. So I guess Uni, USD. Someone asked a question about Uni, and Alice helped answer that question. But something like this, I mean, for one, there's no data, okay? Let me go back to that USDT chart. These are going to be full of hype and all kinds of other stuff. And like Alice said, when you get these, when they go vertical, especially if you're in it, like however, you got some coins, you got some sort of reward because you bought some other coins or whatever, right? That's how these people are in these positions or whatever. And now this thing goes to market, you have a chance to sell. If you're in this thing and it's just giant green vertical, I mean, it was at $14, right? When you see something like that, it's always a good habit to just take something off the table. There's no rhyme or reason. A chart's not going to help you make the decision. You may spot it when it's halfway there and take some off. And then you're going to be like, oh, I could have held on longer. You don't know how high it's going to go. It's random. It's a lottery ticket. So you just, if it's vertical, and the greater it looks, like the more vertical it is, the more you should take something off the table. Now, again, I'm not talking about the whole thing. And Alice put it great. He said he took a good portion of his position off, locked in the profit, and now he's going to hold on to some and see where it goes from here. Okay, great. Right? And it's basically free trade because he's in it. He took his money out. He has a nice profit, and he can hold on to some coins and see if the market runs or not. All right, so I just wanted to bring that up because I know someone had brought that up earlier, and I wanted to address that before I forgot. All right, so let me see what else we got here. AT, yeah, Euro Yen. Hey, AT, thanks for joining us. These cross pairs on the Forex, there's some nice moves in these things, and you know I've been watching them more closely. Usually we just stick to the dollar crosses, but I've been watching some of these, and you know I want to send some of these trades out when we can get some good signals here. So Euro Yen, obviously this is the euro against the yen. And so inflection points, the trend is obviously really bullish, right? I mean, the yen has been weak relative to the euro. Okay, great. Now it's pulled back a bit. Okay, great. And the euro has been kind of fooling around. We'll look at that for some guidance as well, but you do have a bullish pin bar here. It's a tough spot, and here's why I say it's a tough spot. You have the head and shoulders, which is not a trend reversal. It just means you're going to have some corrective action likely to follow. Don't confuse that as a trend reversal. What I don't like about a single pin bar is there's no structure with this right now, and it's following a bearish structure. See, single pin bars or single candle reversals, they're good when they're followed by, a higher high. Like these are bullish structures that they're following. You see these? Because you may say, oh, you don't like a single pin bar, then why would you call something like that long, like an inside bar? Because it's following a bullish structure. It's not following a bearish structure. Hold on, let me erase that. So this pin bar is following a bearish structure. That's a lower high, right? So that's why I'd rather, on something like that, instead of rushing into that going long, I would rather wait to see some sort of bullish reversal structure, not just a lone candle. So that could come in the form of a pop-up and a pullback and a double bottom, okay? or a little mini higher low or a failed low. That's what I'd want to see to be convinced that the bearish structure is no longer in play. Do you see how that works? So like, I'll give you an example from back here. So this thing was giving bearish structures, right? Lower high, lower low, lower high, lower low. Okay, fine. Lower high, lower low. All right, fine. And you notice if you're buying these single candles to go long, yeah, you may be able to get something out of it, but it's tough because if you don't get out of it quickly and you have an opinion or something, you get caught in the next move lower and all that crap. Sorry. But then it gives you a bullish structure, the first one. Now, you may not catch the first one because it needs to first establish itself, okay? Once that's there and it takes out a bearish high, now at this point, you say, okay, we took out the bearish structure. Now I can look for single bullish candles following bullish structures, and there's your first one. So the point is, you have to miss all of this. You have to miss all of that. Let the market establish it in order to be prepared and confident to position yourself for something like that. You see how that works? But what a lot of people do is they get caught up in like all this noise and all this garbage, and they churn their account and they lose money. And then by the time this thing comes, you're either discouraged, you're not in the game anymore, or you miss it, or whatever. Okay? So as you can see, that signal took weeks for it to develop. Anyway, so I just want to point that out and why I hesitate to go along on something like this, okay, until it can prove itself better. And as you can see, it may take some time. So let's take a look at the euro dollar again real quick. And just for comparison purposes, because that's the base pair. And as you can see, the euro dollar has been trying to produce this bearish thing. It's not exactly a head and shoulders because we don't have another lower high. This portion of it is a head and shoulders, sort of, but it's not following through. So it's just a consolidation. And this consolidation is following a huge bullish situation. So I'd be looking for longs in the euro, okay? And the thing is, this current situation in the euro, that pin bar, that's not exactly following a bearish structure. I mean, yeah, okay, you could say, yeah, this is a lower high over here. All right, but it didn't really go anywhere. And the candle recovered very quickly. Now, if we had that pin bar, like if we had the bearish price action, took it to like a low over here, and then we got the pin bar, I'd say, all right, you know, I'd hold off on that. But this doesn't count. You see the difference? So anyway, I'd be more interested in a long on the euro, especially after that pin bar. All right, so something to keep an eye on there, possibly for next week. It's a little aggressive, but if this thing breaks, you know, you can easily get a couple of hundred pips out of something like that, at least. You know, that's what makes Forex worthwhile. Anyway, so that's that one. So thanks for bringing up the euro yen. Hey, Michelle, nice to see you. Thanks for joining me. Let's see what we got. So Michelle, she has a question here. Andrew just sent out a text for QQQ put. Oh, I don't have my phone in front of me. I stay away from my phone, so I didn't see that. That's good to know, DJ. I mean, it's aggressive, and today's Friday, so he likes to take some of those aggressive trades. I'm sure he put what can go wrong with that. Honestly, you know, all right. I don't like the location, to be honest. But, you know, maybe he sees something I don't see. We don't always agree on stuff, by the way. You know, like he may take more aggressive trades. I tend to be very conservative at times, and I tend to, you know, be more that way. So if you like it and you say, hey, you know what, I'll give that a try, and the risk makes sense to you, don't, you know, don't be afraid or don't be indecisive just because I may say, oh, I don't know, you know, because that's just for me. All right, so Michelle, I'm waiting to add some more BTC and Ethereum. What are the lower levels? Okay, so Michelle, so I'll review that again real quick. So for Bitcoin, again, I would want to see that this inflection point here, the 10.5. Now again, the price action is key in such a level, okay? Just because if we get there, just because we do is not enough of a reason, especially if we get bearish candles closing there. It may just, the momentum may take this thing lower. So that's one area to look for bullish reversal. All right. The other area would be here. Now, when I say bullish reversal on like this 10.5, like I was talking about with the euro yen, we would be coming off of a lower high. So a single pin bar or something like that may not be enough. It could be considered an aggressive trade because it is possible that a single pin bar takes it to that higher high and then breaks the little bearish momentum situation. That's possible. Because again, don't forget the broader trend is bullish, and things like that, bullish exceptions are more likely in such an environment. So you have that area, and then you have the double bottom area. Okay, this 10K area, 98.80 area, basically the 99, 10K area, or failed low, which can take it slightly lower. Those would be ideal. Now, in something like a failed low, I would be interested in like a single pin bar because of that unique situation. A failed low is a lot of people got short, now they're caught. And when they get squeezed, there's very high chance of that squeeze being a nice move, okay, on the long side. So something like that, I'm willing to do it. And basically, it's like a double bottom, okay? So those are the levels for Bitcoin. Again, in Ethereum, I'll review that one again too. Yeah, that's right, Michelle. 9,000, 8,500. Well, now 8,500, 9,000 would be, see, and so for the short term, I'd be looking at these levels, okay, which is, what is that again? Like the 9,800 area. That's going to have more weight right now, or more relevance than 9,000 or 9,100. That's a key support. Bitcoin really, in theory, should not go there. Okay, really shouldn't go that low if it's going to stay strong. It can go that low because that is a proportional support, and I would love to see a reversal pattern there as well, a reversal structure. But right now, I would not count on that level. I would be looking at these higher levels for inflection points. That's what I'm watching for. 8,500, if it goes to 8,500 at that point, that's good for inventory. You know, you want to buy and hold on for a while if you get maybe some buying activity there. But that would, at that point, it would prove, oh, so for position trades, okay. So thanks for clarifying. For position trades, I'd wait for the more extreme levels, 9,000 and 8,500, okay? The thing is, you have to keep in mind, for inventory is a different mentality than swing trade. For those that may not know the difference, inventory is bigger picture, like an investment, and you're not going to be so worried about the shorter time frame trend. Whereas as a swing trader, I'm very interested in trades for a couple of days, for a couple of weeks, and that's it. So the shorter movements, the shorter time frame movements are going to be much more important to me. So for position trades, yeah, 9,000 and 8,500. Keep in mind, if we start testing those levels, especially 8,500, Bitcoin has no business being there if it's going to maintain this broader bullish structure, which means it's more likely signaling a range, okay, at that point. And it may go lower, and it's going to give some opportunities to accumulate more, but it's going to look, if it starts pushing those levels, it's going to look scary. And you're going to have a lot of people coming out. Oh yeah, 3 to 5 years, yeah. You know, anytime it starts pushing any major lows, okay, you can even look at the March low. You know, what was it, 4,400, 3,800. I doubt it's going to go that low. At least it shouldn't. Anything is possible. But my point is this. Those, like the 9,000 and 8,500 levels, those would be good for that type of time frame. But just keep in mind, when you're buying there, or if you're buying there, there's going to be a lot of bearish talk. Just keep that in mind. People are going to say Bitcoin's no good, Bitcoin's going to zero, it's going back to 3,000, and all this other nonsense, because that's how usually the bears get very extreme at such levels, and that's the best time to accumulate. Okay, so you can't pay any attention to that. You just have to size appropriately so that if it keeps going lower, you know, you're not in a position that can affect you emotionally. All right, so Ethereum, real quick. Let's take a look at Ethereum. And so Ethereum, so for that time frame, you know, and Ethereum tends to be more extreme. with its inflection points with that type of time frame. Here, let's look back here. So for Ethereum, you're looking at basically, which would be relevant to Bitcoin, it'd be around this level here, which is the 300 or high 200s, like 290, 280, somewhere around there, 250 area. Those would be very attractive areas for such accumulation. And if it keeps going lower, it's going to find supports along the way, and that's where you want to take your small bites and keep building inventory, okay, in those type of situations. Just keep in mind, this thing, where was this thing at the March low? This thing was as low as 100, which means, if it's testing that again, it's not easy to have the courage to step in front of that. Of course, if you're doing it with small increments, then yeah, it's easy to have the courage to step in front of that because you're not going to care. But that's what you have to keep in mind for that. I would not be anticipating such low levels. I'd be looking at, if anything, extreme right now would be like 250, okay? One thing you can do is if it starts taking out, if it gets extreme for whatever reason, and you see this thing trading below 200, you could just step aside and wait for stability, okay? And then start accumulating once some form of stability appears after such a move, okay? Just something to keep in mind. All right, I know my answers are very long. Let me see, how am I doing with time here? Okay, 46 minutes. All right, let me see, do I have any other questions? I think I answered everyone's questions. By the way, if you're new to Greenbridge Investing, please make sure you check out our website at greenbridgeinvesting.com. Subscribe to the YouTube channel here if you like it. Also, send me a like if you like my analysis, if you like what I'm doing. We do offer swing trade signals by text and by email. We also have portfolio management ideas and a chat room, which most of the people here are in. They're in the premium chat room. And we share insight and analysis throughout the day in there. A lot of stuff comes from Andrew. And it's very insightful, especially if you're trying to figure out how to do stuff with your positions. And if you ask questions, about positions. Here's a stock that Andrew sent out, I think it was yesterday, or maybe the day before. And people were asking about this one. Obviously, this one's in play. And, okay, not bad. But, again, something like this, just keep in mind what you're up against. You're up against this inflection point here. And what is that? 42.76. So if you get to that area, wouldn't be a bad place to start taking some money off the table. All right, just something to keep in mind. But that's your first resistance that you're dealing with, and it's an old support. Another thing I want to mention real quick is, when we have our podcast every Tuesday, we have a pick of the week. And this week, I picked 4, okay? Shift 4 payments. And this thing became active the other day over here, right? And it stopped out. It stopped out during the sell-off. And as you can see, it's starting to give a bullish pin bar now and a possible failed low situation. So if this thing takes out the 45.5 high next week, this thing could be in play again for a long because it's just a higher low. All right. And you have a double bottom failed low situation developing off of a broad higher low, right? There's really nothing bearish about this formation here. It's just a corrective move. So something to keep in mind there. These trades of the week, they don't all work out nicely, okay? So I know a lot of people got into this one, and it's, like I said, they don't all work out nice. Just something to keep in mind there. Because the week before I called HIB, right? And I know a lot of people missed this one, and this thing went to all 3 of its targets, right? I mean, look at this. The call was around here, okay? And this thing just went vertical pretty much since then. They don't always work out like that, obviously. So I just want to point a couple of those things out. Again, as a free member of Greenbridge Investing, if you go there and put your email in, just sign up with your email, you'll receive this by email, okay? There's no strings attached to that. It's, hey, you sign up and you get the email, and it's just to give you an idea of what our trades are like and, the kind of information we send out. As a member, you get the texts, you get the emails, you get the chat room, and you get portfolio stuff. You get a lot more, obviously. All right, everyone, so I'm going to leave you guys with that. Do I have any more questions? Any other questions I can answer for you guys while I'm still here? Today's Friday, So the next one of these most likely will be on Monday. I don't do these every other day, like I don't do these on a schedule. All right, I try to do them, enough to keep people so they know what's going on. But sometimes, I don't have like an exact schedule, just so you know. That's why it's good to just register for the channel and get the email notification. But I usually do these like around 2 or 3 o'clock Eastern time when I do them. Okay, and it's usually I try to do them on Monday, Wednesday, or Friday. All right, everyone. So again, thank you for joining me. I don't see any more questions, so I'm going to wrap this up. Enjoy the rest of your Friday wherever you are in the world. I know we have people all over the world here, from the Far East to Europe to the U.S., everywhere. And so enjoy your Friday wherever you are. Enjoy your evening, and I will see you next time. Again, thank you very much for your participation, and I'll talk to you then.